Higher education is supposed to be a ticket to opportunity, a pathway to a better life, and a foundation for building a secure future. For generations, earning a college degree was seen as the surest way to climb the economic ladder and achieve the American dream. But for millions of Americans today, that dream has turned into a lifelong financial burden. Instead of opening doors, student loans have become shackles, weighing down graduates and their families for decades. Student loan debt now tops a staggering $1.7 trillion, a number so large it's hard to even imagine. This crisis affects over 42 million people, nearly 1 in every 5 adults in the United States. This debt isn't just a number on a page. It shapes lives in profound ways, forcing people to delay buying homes, putting off starting families, and making it nearly impossible to save for retirement. The ripple effects touch every stage of adulthood. And it's not just young graduates who are struggling. Parents who co-signed loans or took out debt for their children's education, as well as mid-career professionals still paying off their own degrees, are also trapped by monthly payments that never seem to end. The economic impact is huge. With so much income going toward debt, there's less money to spend in local businesses, fewer new companies being started, and a growing gap in generational wealth. Communities across the country feel the strain. Gen Z is being hit especially hard. Many are entering adulthood already deep in debt, with credit scores dropping and 34% carrying student loans, twice the national average. This generation faces unique challenges as they try to build their lives. Lower credit scores make it harder to rent an apartment, buy a car, or qualify for a mortgage. This creates a cycle of instability, where financial setbacks pile up and opportunities slip further out of reach. Delinquencies are at record highs. Over 10% of student loans are now seriously past due. For many, the stress of falling behind is overwhelming, leading to sleepless nights and constant anxiety about the future. This isn't about irresponsibility or poor choices. It's about a system where the cost of education has skyrocketed while wages have barely budged. Students are being asked to pay more than ever, with little hope of earning enough to keep up. For many families, making monthly payments means choosing between paying down debt and covering basic needs like groceries, rent, or medical bills. The pressure is relentless, and the sacrifices are real. That's why student loan forgiveness is more than just a political debate. It's a daily reality for families in every corner of the country. The question isn't whether this crisis exists, but how we'll come together to solve it. Student loan forgiveness programs have been a beacon of hope for those drowning in debt. The two main options, income-driven repayment, IDR, and public service loan forgiveness, PSLF, were designed to offer relief. IDR caps payments based on income, with forgiveness after 25 years. PSLF rewards a decade of public service with debt cancellation. These programs help people buy homes, start businesses, and save for retirement, fueling the economy. For public servants, forgiveness validates their career choice and keeps talent in essential jobs. But complex rules and high rejection rates have left many feeling betrayed. Even with recent reforms, new challenges keep relief just out of reach for hundreds of thousands. The Department of Education faces a massive backlog, over 1 million unprocessed IDR applications and a growing pile of PSLF requests. That's more than 1 million people stuck in financial limbo, waiting for decisions that could change their lives. For public servants, the wait is especially painful. Tens of thousands have fulfilled their end of the bargain, but forgiveness is delayed. At the current pace, it could take over a year to clear the backlog. Every month of delay means more uncertainty and unnecessary payments. The department blames the previous administration while promising to fix the problem. But for borrowers, promises aren't enough. They need action. The longer the wait, the more trust in the system erodes. The very purpose of these programs, timely relief, is being undermined. Recent policy changes have upended the student loan system. In July 2025, the Trump administration eliminated all existing IDR plans, replacing them with less generous options. The new Repayment Assistance Plan, RAP, requires 30 years of payments before forgiveness, much longer than before. Borrowers on the old SAVE plan now face accumulating interest, even as they pay. Collections on defaulted loans have resumed, with harsh consequences like wage garnishment and seized benefits. The result: confusion, stress, and millions caught in a policy transition. As the system changes, the backlog only grows, leaving borrowers in the crossfire. One key cause of the backlog was a 2025 freeze on all IDR application processing. The administration said it was needed due to legal challenges, but the freeze affected far more than just the contested SAVE plan. Borrowers trying to enroll in or recertify for established plans were locked out, creating a surge in unprocessed applications. Many were forced onto unaffordable payment plans, risking delinquency or default. Even those eligible for forgiveness were left waiting, their debt relief delayed. Critics call the freeze an unnecessary overreach that created a crisis. Even after the freeze ended, the backlog remained overwhelming. For over 1 million families, the uncertainty and anxiety continue. The American Federation of Teachers, AFT, is fighting back in court. In March 2025, the AFT sued the Department of Education, arguing the freeze illegally denied borrowers their rights. The union is now seeking class action status to represent all affected borrowers. Plaintiffs include public servants waiting months for six-figure debts to be canceled. The lawsuit aims to force faster action and accountability. Meanwhile, reports suggest the department may soon reject over 400,000 IDR applications tied to the blocked SAVE plan. The legal battle highlights the real-life impact of delays and shifting policies. The courtroom is now a battleground for the future of student loan forgiveness. Behind every statistic, there are real people, teachers who stay late to help students succeed, who spend their own money on classroom supplies, and who dedicate their lives to shaping the next generation. There are nurses who work double shifts, comforting patients through the night, and parents who juggle work, family, and community service, each of them waiting, their lives on hold, for a promise to be kept. Imagine dedicating a decade or more to public service, making every required payment, following every rule, only to be met with months, sometimes years, of silence and uncertainty when you finally apply for loan forgiveness. For over 74,000 public servants, this isn't just a hypothetical, it's their daily reality, a waiting game with no clear end in sight. The financial consequences are severe, missed payments pile up, savings are drained, and families are forced to make impossible choices just to get by. Damaged credit scores make it harder to rent an apartment, buy a car, or even qualify for a basic loan, while budgeting becomes a daily struggle. Major life decisions like buying a home, starting a family, or saving for retirement are put on indefinite hold as debt that should have been forgiven continues to haunt their credit reports. The psychological toll is just as heavy. Anxiety keeps people up at night, stress seeps into every aspect of life, and hope for a better future starts to fade. Frustration grows, and a deep sense of betrayal takes root, as people realize the system meant to help them is now holding them back. Plaintiffs in the AFT lawsuit have waited months, sometimes over a year, for debts as high as $756,000 and $198,000 to be cleared, watching interest accumulate while their futures remain uncertain. This isn't a minor inconvenience, it's a fundamental disruption of their lives, affecting where they live, how they plan, and what dreams they dare to pursue. Multiply this by 1 million, and you begin to see the true human cost. An entire community of public servants left waiting, their futures on pause. Each backlog number is not just a statistic, but a person with hopes, responsibilities, and loved ones depending on them. It's a family, a future, a life story paused in uncertainty, waiting for justice and relief. The stakes are deeply personal and profoundly life-changing. Financial experts and advocates are sounding the alarm. Many blame the administration's freeze for creating an avoidable bottleneck that ballooned into today's crisis. Experts warn that, with slow processing and ongoing legal battles, many borrowers will wait well into 2026 for relief. Teachers' unions call the delays a betrayal of public servants who relied on the promise of forgiveness. The consensus: the system is unsustainable. Without urgent change, more borrowers will default, damaging lives and the economy. Calls for transparency and efficiency are growing louder. The pressure is on for real reform. If you have federal student loans, staying informed is more important than ever. The rules and programs are changing rapidly, and missing a key update could impact your repayment options or even your financial future. Make it a habit to check studentaid.gov regularly for the latest news, policy changes, and deadlines. Keep detailed records of all your payments, correspondence, and any notices you receive from your loan servicer. This documentation can be crucial if you ever need to dispute a charge or prove your payment history. If you find yourself caught in the backlog or facing delays, don't wait for problems to resolve themselves. Monitor your account activity closely and reach out to your loan servicer as soon as you notice an issue or if your payments become unaffordable. Early communication can help you avoid missed payments and protect your credit score. Forbearance can offer temporary relief if you're struggling, but remember that interest may continue to accrue, increasing your total balance over time. Take the time to understand all your options, including deferment, income-driven repayment, and consolidation, so you can make the best choice for your situation. The repayment landscape is evolving. For new borrowers, the old income-driven repayment plans are no longer available. Instead, you'll choose between the standard plan and the new 30-year repayment assistance plan, each with its own pros and cons. If you're already on the SAVE plan, take time to evaluate whether it still fits your needs or if switching to a different plan could save you money in the long run. Tools like loan simulators and consultations with a credit counselor can help you compare your options and plan ahead. Remember, your financial health is at stake. The decisions you make now will affect your monthly budget, your credit score, and your long-term financial goals. Take a holistic look at your finances before making any changes. Stay engaged with the latest legal developments, attend webinars, and read up on your rights as a borrower. Being informed empowers you to advocate for yourself and avoid costly mistakes. Navigating this uncertainty isn't easy, but being proactive, by planning, asking questions, and seeking help when needed, is your best defense against unexpected setbacks. The student loan landscape is shifting, but with knowledge and preparation, you can still make the best choices for your future and move forward with confidence.